Hi everyone, hope you're all doing well, and first of all I'm going to start off by saying thank you so much for getting me to 5,000 subscribers. I would not have been able to do it without you guys and your support on the channel that you have been giving me, especially over the last kind of like 2, 3, 4 months. Over that kind of time period, like the like button has been absolutely smashed. Like there's hardly any videos where we get less than 100 likes. Sometimes it's even 200, 300 likes, and that's all down to you guys giving me that support. With that support puts me out in the YouTube algorithm. So thank you so much for that sort of stuff that you have been doing. And for you guys that check me out and then subscribe and keep watching my videos, thank you so much, because obviously that helps as well. So thank you for everything like that, because like I say, 5,000 subscribers is somewhere that I've been wanting to get to for a very long time, and we have got there, which is super. I guess we're on to the road to 10,000 subscribers now, which is pretty good to think about. I mean, a 5-figure would be absolutely insane. So, I mean, I don't know when we'll get there, but if we could get there, that would be pretty awesome to get to that sort of level. But first of all, I just want to say thank you. I mean, I'm trying to think of something special for a 5,000 subscriber video. Still not decided what to do. I mean, I was going to say like a live like question and answers, because I know some of you guys like that. But yeah, I mean, I don't know if there's something a little bit different, because it is kind of like the first kind of big milestone, I guess. The next one's 10,000. So, I mean, I don't know. You guys let me know. I mean, fire some ideas at me and I'll definitely consider it. But today we're going to talk about some Chinese stocks, because there was some news that came out that really did affect some Chinese companies, especially like the likes of Alibaba and Tencent. And obviously, I'm a shareholder in Alibaba, so something really important to me. And also there was Huya earnings, and I wasn't really going to talk about them because there wasn't loads to talk about in the earnings, but because I'm here talking about Chinese companies, and obviously Huya, Chinese company I'm invested in, just makes sense to just kind of touch on it for like a 1 minute, 2 minute period, because like I say, it probably wasn't ever going to be enough for a full video, but now because I'm here talking about Chinese stocks, it just kind of ties in so nicely. So we'll get stuck onto Huya in a little bit, but first of all, we'll talk about some of the news that came out about some of these Chinese companies. Now, a few months ago, I actually made a video about Alibaba and Chinese companies and the potential of them getting delisted from the US stock exchange, and I said at the time this wasn't going to happen. A lot of people saying that Chinese companies are very, very dodgy, and I said they're not. It's just that the US doesn't like China at the moment because we had Trump in as president, and I said that none of these Chinese companies will get delisted from the stock market, and we're still here. And at the time I took a lot of grief for it. I said a lot of people gave me a lot of hate, saying that Chinese companies are quite honest companies, and I got a lot of hate for it, to be fair. But still, you look back now and they're still on the stock market, they're still trading. And I think over the last kind of few months, with what we're going to touch on in a second, and obviously like the Ant Group not being allowed to go on the stock market because of concerns there, I think it shows that Chinese companies do play by, you know, fair rules, and they will crack down on companies that do not meet standards. So I think this kind of like, oh, we'll get China give like Chinese companies a pass so they can, you know, dominate China and try going to the US and dominate the US stock market. I think this is kind of getting proven over the last 12 months that they are very honest companies, Chinese companies, and they're not stocks to fear to get invested in. And like I said, you know, like when I made that video a few months ago, if you were one of those people that were scared about getting into Chinese companies, you look back now and you look at some of the gains and you're like, yeah, I probably should have bought some, because some of the Chinese stocks have done fantastic over the last kind of few months. But the new article that came out is that China's going to be clamping down on a lot of its big tech companies. So China's biggest tech firms dive in value over Beijing crackdown fears. Frantic stock sell off across sector anticipating new monopoly rules, with Alibaba shares falling 9.8%. Now, funny enough, Alibaba actually did recover a lot of that, which we'll touch on in a second, which is one of the companies that I'm invested in China. But hundreds of millions of dollars have been wiped off the value of China's biggest internet companies following 2 days of frantic selling, with investors fearing Beijing plans to curb the power of homegrown tech firms. Shares in Alibaba, a Chinese version of Amazon, questionable, it's more like eBay, but we'll let them go, dropped by 9.8% on Wednesday, while its rivals Tencent and JD.com fell by 7.4% and 9.2% respectively. Now, I'm also a shareholder in JD.com. The only one here I don't have shares in is Tencent, but I do rely on Tencent a little bit because of Huya. So they all three of them are kind of interesting to me somehow, and Tencent is a company that I would like to get invested into at the right price. At the time I chose JD.com over Tencent, which has worked out pretty well for me. but I still love Tencent. So I mean, I think they've got earnings very soon, so I don't know if that will move it at all, but yeah, I mean, I'm a fan of all three. The sell-off was sparked when State Administration for Market Regulations, China's top regulator, published plans designed to limit the dominance of big internet firms and promote the sustainable and healthy development of online economy. So from this kind of thing, we know what happens is that Tencent, Alibaba just love to buy any upcoming company, and they can control them and keep as the big dogs. And that's what they've done for a very long time. We also know they do tactics like running companies at a loss to destroy other companies, and basically mean they can't run profit margins and stuff like that to kind of like, you know, stop them from developing to anything. And we know Amazon does something very similar to this. So I know we've talked about this recently with the US. They've looked at something like this, you know, stopping companies having a monopoly. But it looks like China could actually bring this through, and I probably think they will bring it through. So I'll kind of talk on about what I think in a little bit about that and the future of like Alibaba and Tencent from that. But obviously, Alibaba was a company that got affected by it. We've seen it go from about a 300 company down to 260. I've had a few people message me about this and saying, is it a good time to go buy this one? Personally, if I wasn't in Alibaba, I would consider buying this one right now on the dip. Lucky for me, I actually do have shares in this one. I bought, my average in price on this one is about 177. So yeah, I mean, I've been in this company for about over a year and a half now. So I'm still up 60%. I mean, at one point I was up nearly 100% on this one when it was, you know, getting towards the $300 range. But I'm quite lucky because I got in a while ago in this company because I thought it was fantastic. So for me, when I've got an average of 177 in a decent position, I'm not exactly rushing into it at these prices. So it's kind of a bit of a different situation for me. But if you weren't in the company and you're like, I'm a big fan of Alibaba, it's dropped quite a bit here off its highs. I would say that it's probably worth considering if you wanted to buy a position and, you know, obviously be prepared to average in with it be, you know, dropping down here. So yeah, it's a different one for me because I personally won't buy here. But if I wasn't an investor in Alibaba and I was looking at it right now, I'd be like, maybe that's worth a punt. So it's a different scenario, I guess, where you're at. Next up was Tencent, and this kind of dropped a little bit, nothing huge. Like I say, we've got earnings on this one, so it might change a little bit by the time this video goes up. But I'd say that this is still probably a little bit too high for me. I would definitely look at probably Alibaba over Tencent at these sort of prices. But overall, I don't think it'll affect Chinese companies too much. I think they've kind of got a big enough monopoly already that they'll still carry on striving. And I think they'll be okay. I think it just makes it a little bit harder for them to kind of maybe in the long term keep up share growth with not having the ability to go and buy out companies. That would be the only big risk that we have. And obviously that leads me on to kind of Huya, because obviously one of my bull cases is Tencent and Huya, and Tencent go buy a massive stake or an even bigger stake than what they do have in Huya. So that kind of, you know, it'd be interesting to see what kind of fully comes out, and if, you know, if they already have a stake, they'll be still allowed to buy more in that company, rather than if it's a new company, they're like, oh, you can't get that because you have this company. So it kind of does affect maybe my Huya more than anything, but still, Huya without Tencent going in and buying a bigger stake, I think will do totally fine because of the stake that Tencent already has. So I think my biggest position that will be affected probably will be Huya, and I think Alibaba, Tencent will still be fine. But I think because one of the bull cases I had is that, you know, Tencent go buy a bigger stake in Huya, that might not likely happen now. So that would be the only little negative that I have seen probably from this. Now Huya itself brought earnings out. Earnings were kind of everywhere. I mean, Huya was kind of up, and then this article came down, and this article came out and it went down from there. So it ended up being up about 3.5% by the day finish. But yeah, I mean, Huya, it seems like earnings would take it positively. Before the article came out, it looked like it was up, you know, like 5%. So I guess earnings would take it positive. It has come down a little bit recently in share price. I think it's just kind of like everyone's just sat waiting for this merger now. So I mean, for Huya's sake, we just need the merger done. We know if the merger's not going to happen, you know, it's not going to happen. Just, you know, say it's not happening. If it's going to happen, let's get it done, because the share price is just wondering about here, like what's going on. So we just need a merger to either happen or not happen. Seems like it's still going to happen at the moment. From what was in the conference call, seems like everything's still going to happen there. So yeah, I mean, we haven't had the vote yet, but like I say, I think it will go through. So we just kind of need to know where we're at, really, I think, with this merger. And, you know, unfortunately, I think it means Huya is just going to be a bit lost for the next kind of couple of months until it gets voted through. But Huya jumps 3% after Q3 net income growth of 75%. Net revenues rose 24%, which was the only little bit because I would have liked revenue to be a little bit higher than 24%. That was the only negative that I did see in here. But yeah, not too bad. Gross margin increased to 22%, which was pretty good. But like I say, the big thing was the net income. You know, it doubled absolutely huge, 75%. That was an absolutely massive, great beat by Huya. We also had average monthly users rising. We also had paying users rise. And the big thing to me was the revenue breakdown. And live streaming got 391 million, up 23%. And advertising and others, 23.2 million. And that was up 44%. So that was very good growth on that side. Hopefully we could see them still ramping up that advertising side of it. So overall, I was really happy with the profit. I was happy with the advertising growth. And like I said, the revenue was the only thing that was disappointing. But overall, when you look at that profit growth, that's what I really, really like about it. That profit growth was amazing. So yeah, I mean, I think revenue will sort itself out a little bit more going forward. But overall, I'd give the earnings a 7.5 out of 10. I just think the revenue could have been better, but I was happy with everything from the earnings overall. So hopefully I've covered like most of the Chinese stuff, Alibaba, Tencent, Huya earnings as well, which I weren't going to do, but because we're on the topic of Chinese companies, I could just squeeze a minute or two in there to cover the earnings. Like I said, there wasn't much going on, but still not too bad, especially on the profit front. That was pretty good from Huya, but I think like until that merger goes anywhere, I think the stock's just going to be like, what's going on, you know? So I think we need that to happen really, and like I say, we haven't got the vote yet, so we'll see what happens. But overall, that's everything to do with China today. Hope you enjoyed it. Smash the like button, subscribe if you're new around here. The road to 10,000 subscribers is on, and I'll see you next video.